Welcome back. Let's take a look at how the markets have performed now, which has certainly been quite an interesting picture. Still, more cases across the globe, which has created nervousness with regards to the coronavirus pandemic. The stimulus efforts out of the United States, still no word on that. Getting word from Mitch McConnell there from the US Senate that nope, they still haven't had any discussions with regards to it and where to from here for that stimulus effort, although Donald Trump is trying to tout some positivity when it comes to that. Of course, US Democratic presidential candidate Joe Biden choosing Kamala Harris as his running mate as well out in that country, the first African-American woman to then be on the ticket for a major presidential candidacy as well in the United States. So really good news out on that front in some sense as well. Investors, though, will be asking themselves, will there be more stimulus? Will the market be able to perhaps relook at the sentiment of that US-China trade deal, which is, of course, also set to come under review this coming weekend? For now, though, we get a sense of where the markets are looking internationally. We have a bit of a mixed picture, though, with the Hang Seng and Hong Kong going up 1 4/10%. So a slightly better picture there to some extent. Down, however, for the Shanghai Composite, so not overall a good day, but some positivity filtering through. That's gone into the European market, which has now shown some positivity as well. The FTSE 100 in London is 1.2% better off than on that front. Pretty flat stance out in Germany, though. That's at 0.02% higher, 0.4% up than for the CAC 40 out in France. On the local bourse, then, 0.3% higher for the JSE All Share. It's above that 57,000 point mark, 57,333 to be exact there. The financials, unfortunately, dipping down. Initially, the start to today's trading was actually negative for the JSE All Share, but the banking counter is going down 0.5%, so that coincides with the financial counter then as well. Resources 0.5% weaker, although both gold and platinum miners were able to go up today. 2% higher, in fact, for the platinum miners at this point in time. That's 1.4 index points on that front, while South Africa's listed properties continue to languish. They've gone down 0.4%. Just to zone in a little bit on that All Share index, the biggest movers on that front there. Over here you have City Lodge going down a massive 14.7% today, so a big fall for that one in terms of the companies within that JSE All Share index. Sun International also having seen that rights issue come to the fore, oversubscribed even when it comes to the rights issue, so they've managed to go higher as well, 9.5% there. Lewis, the furniture retailer as well, 9.37% to the good on those and that front. Those are the top three gainers. The top three losers today, unfortunately, Stein Property, Hammerson, as well as Sasol. Sasol going down 5.8%, so a big loss on that front there. Onto your commodities board then as well. Brent crude sitting at $45.08 a barrel. It's much higher today, just over 1%. In fact, perhaps more demand coming back into the market picture on that front, with platinum going down, but only slightly. A good tick up for now, though, for the price of gold. It had even breached the 1900 mark, right, having gone down below $2,000 a fine ounce. Then, of course, that was a massive surge towards nearly $2,100 a fine ounce, in fact. But it's back at a level last seen nearly a month ago. And your currencies, strength for the local currency then, even if it is only marginal, 17.42 against the US dollar. It's 20.47 for a euro. A pound sterling will set you back 22 rand and 66 cents. Let's talk about all of these elements then that have certainly shaped the market. Makwe Masilela joining us on the line. Makwe, the market picture has always just asked itself, can we deal with the coronavirus? One day it seems like it can, the next day it can't. Everything from stimulus efforts to that China-US negotiation and relationship are bound to be the biggest issues to focus on for the market.
Definitely, Arabile, and good day to you. And the market, yes, we know the narrative already. Well, I mean, we've been at a measure of what is happening with the new cases, and we've seen that we've got more new cases when it comes to the coronavirus. But for the fact that there's some hope when it comes to the vaccine, I think the market are at least getting some strength coming out of that. Yes, we did mention into about the stimulus that has to come from the U.S., and so far there's no deal. And I think the markets are factoring in that we should at least get a deal around September or so. So yes, then that will continue to boost the markets. As we've seen that markets have been relying on the stimulus coming out of that. And also the bad news that came out of the UK, we saw their second quarter GDP contracting by almost 20%. But if you check other economic data, you check the last of the PMI numbers that we've been getting, it shows that at least there is some bit of life, in the economy. The problem for the markets, I think, will be what's going to be happening with the escalation of the tension between the two biggest economies, and also also if there is, or are we going to be able to get what the people call the second wave when it comes to the infections. And I think should that happen, I think markets and governments are better prepared to come around, especially with the developments that we are seeing when it comes to the vaccine. But yes, markets will continue to be at the mercy of the geopolitical tensions and also on the issues when it comes to the vaccines, whether we're going to get that or so. But we still pin our hopes that the U.S. will come to the global market rescue by coming with that stimulus package, because we know it ended, that relief, coronavirus relief, it ended end of July. That $600 that the guys were getting almost a weekly. So that will also be able to help the markets. We've seen the numbers came through, the earnings, they did their part, and that was it. But we are back to normal, which are the real issues. What is happening to the real main economy? As long as these efforts, whether it's from governments or central banks, are not yet filtering into the main economy, then I think the market players will continue to ride it when they see that there's an opportunity to just get into the stock and take profit when it arises.
Makwe, what happens though if one takes a look at sentiment? I mean, you get gold having gone shooting up almost to $2,100 a fine ounce at some stage, dropping off quite massively to around $1,800. And then locally you also have business confidence, yes, ticking up, but still not at levels where it perhaps should be. What do you read within this market then and think to yourself, okay, are we actually getting better or have things actually gotten worse here? Where are we?
Truth be told, fundamentals are out of the window, and gold was going up because we saw what was happening with the developments and the tensions, and the gold managed to benefit out of that. But the minute you see that at least there's some developments when it comes to the real economy, meaning the risk is back on, then we don't have any reason to see gold as a safe haven. We got back into stocks. And yes, as much as gold was down over 6% yesterday, I mean, today it was a little bit up, because now we think that, what chances are, as we expected to see the agreement when it comes to U.S. lawmakers, it didn't come to fruition as yet. Hence, we see gold at least still getting the shine again. As we said, it's up a little bit on the back of that. And our business confidence, it makes sense. We know it has been down, for the past 2-3 months, and yet still at low levels. But yes, it improved a little bit because all economies, all sectors of the economies are not yet fully operational. And yes, we also don't know, especially what's going to be happening with the employment numbers going out there. Apparently, out of 5 people who are employed, 1 has already lost, a job. So that tells you it's 20%. And now it talks to what's going to be happening to a bad debt when it comes to banks. As much as we can say our banks are attractive at very low valuation, but the problem is, if this is true, people will be losing jobs, then definitely bad debt is going to be a problem for the bank.
So interesting as well. Northern Platinum as well coming out with some numbers on that front, and perhaps interesting then as well to note that indeed the mining companies have had mixed fortunes so far. It hasn't been easy because a lot of them have also said they're not going to invest as much in the local economy. What do you make then of Northern Platinum?
I think the guys, when they're not going to be investing more, is because they're not too sure, I mean, this uncertainty about all these things. But we've seen, especially the gold miners, the PGMs, because of higher prices that they've been getting, as much as they've lost some of the production, but at least that was countered by higher prices.
All right. Makwe, appreciate the time. Thank you so much for joining us this afternoon. Then, of course, Makwe Masilelas from Makwe Fund Managers, helping us get to grips with that picture then, getting to unpack it a little bit there as well. As we head towards the end of the bulletin, though, let's get into some economic stories. Then consumers staying away from the shops in the month of June as we get into the retail sales numbers. Stats SA data showing that retail trade sales contracted by 7.5% in June compared to the same time last year. It's the largest negative annual growth rate that was recorded for retailers in food, beverages, tobacco, clothing, as well as all other retailers. Now, retailers could trade in June under eased lockdown regulations, but demand remains subdued for retail sales. There's been a high number of job losses as some companies struggled to stay afloat while others had to cut down their workforce. Some households have had to do with salary cuts, putting pressure on disposable income. Then the retail sector will likely remain lackluster due to low consumer confidence resulting from the effects of COVID-19.